I'm Yura. Hello, everyone, and welcome back to our sixth ownership report. Today, we'll be chatting with the Crafts team and the Refi Hub team. They have a lot of updates to share. And we also want to show that ownership is not only focusing on the MetaDAO ecosystem, but also on the wider ownership ecosystem. I don't want to take too much time myself, so I'll invite Philip on the stage with me. So, hey, Philip, how are you? And how are you feeling today? It's I think one more day until the race closes. So yeah, we'd just like to know how you're feeling.
Yeah, feeling pretty pumped. Hey, nice to meet you, Vukan. Thanks for having me. My pleasure. Yeah, feeling pretty pumped about the race ending tomorrow. You know how it is having raced yourself recently. I think
Yeah.
it's always the last. It's pretty exciting and seeing the commits come in and more people learning about the concept and the company behind it as well.
Fantastic. So actually today we're gonna have our first segment, which is gonna be covering crafts and more on the infrastructure side, and then later we're gonna be also speaking with the Refi Hub team. So let's dive right in. Actually, it would be even fantastic if you could share your screen and maybe even show what's the full flow for someone on the crafts platform, and we can even use Refi Hub as the example. So how does it look? Where can I research about Refi Hub, see about the project, and how can I invest hands-on on the platform?
For sure, for sure. Let me just share my screen here. I guess you can see my screen now.
Yes, we can see it. Yes. Fantastic. Yeah,
Yes.
we can see the landing page.
Yeah. So here on crafts.dev/race/refi hub, or just in the banner on crafts.dev, you will see the refi hub ending in 21 hours. And yeah, here you have all the information that you need as well about refi hub. So how it works, how they tokenize solar deployments, all about their pipeline of solar assets and the institutional deployers that they're working with and how they make revenue and how much revenue they expect at 50 million assets under management. So all this information is here with their current traction, with their pipeline, and all the unit economics and info about the team. You can also see the team here with links to their X accounts. And we also linked their investor deck here. So you can do the full information. And we also host the data room of Refi Hub on our page, which you can access through the investor waiting list on Crafts. And we have a roadmap here, so all the information is here. And then after you've done your research, you can map out, okay, what are the competitors in the solar RWA space? What are they valued at? For example, there's one Plurify that raised at an 80 million valuation just last year. And based on that, we allow people to submit bids and set their max FTV. And actually, based on the auction, calculate the clearing price of what the company is actually worth.
Nice,
So-
nice. I mean, seeing this page, I have a lot of questions, a lot of things that are different to the Fertardio MetaDAO route. I mean, coming as someone who's familiar with that one. So first thing that I would like to ask is, I see the equity link is between 10 and 14%. So I guess the first question I would like to ask is, from my side, from the Fertardio MetaDAO end, the tokenization there is 100%. I assume on on Crafts with Refi Hub, you can choose to do only a percentage of the equity. So can you explain more, how does that work? And also, as like a very basic question, does that mean that 10 to 14% of the revenue would go back to the treasury, or how is it different?
Yeah, I think how you can see it is, in the traditional fundraising world, how a VC would invest into a company is they, for example, they have a safe with the operating company. In this case, for example, Refi Hub, they say, okay, they want to put in 500K, and they're having a safe agreement where they also have different terms around liquidation preferences, drag along rights, and then you sign this term sheet, and this term sheet is on the fund level, and that way you acquire a partial stake of the company. In our case, it's very similar in terms of that we have an SPV that's actually acquiring a partial stake of this company, and then this SPV is actually issuing governance tokens that over this SPV, and we don't provide the whole funding to the company at once. So similar to MetaDAO, the funding goes to a treasury that's DAO controlled and only is provided to the company on a monthly basis.
Got it. So can you hone in more on that? So what are the token holder protections that you have on Crafts, and how is it different from MetaDAO? Obviously, you have Futarchy governance, where you need to make Futarchy proposal. If it passes, you get the extra funding. So how is it different here, and does it being only 10 to 14% equity link affect that as well?
Yeah, I think if you, like, my broad perspective is that in MetaDAO's case, all the value accrual or the rights on the token side, which I think is perfect for, on-chain protocols and most of the crypto protocols that make all their revenue on-chain. Our case is more focused on traditional startups, let's say AI companies, robotics companies, or in this case, an RWA company, where a lot of the revenue comes from off-chain sources, where you need this legal layer that actually has, reporting rights and disclosures. So you actually have a legal protection on the legal side instead of the smart contract side. But what investors get as well is that the company can't just rock, because the money that's being raised here, let's say they reach, 500K, the 500K doesn't go to the company at once, but it's streamed on a monthly basis. So for example, if the company doesn't perform as token holders want, they can initiate a liquidation of the treasury and the distribution.
Got it. I mean, makes sense. I guess another question I would have looking at the screen here is another thing that's different from MetaDAO is I see that the target raise is variable. Usually the I guess how at least we did it for Jurassic on MetaDAO is we set 12 to 18-month runway, and then from that we kind of went on the target raise. So can you explain a bit more, how is the model here working with the raise range, and what is the difference if they raise 400K or if they raise 1.12 million? Is it just more runway, or is there more invested in each month, or why is there an actual I would guess range? Because some investors, I mean, I'm just playing devil's advocate here, they say that's bearish if you have a range, because it kind of shows you have a more variable plan. So yeah, we'd just like to understand that as well.
Yeah, I think what we designed is that, a lot of these assets, you often don't know really what is it worth. And I think even in looking at all the ICOs that happened over the last 3 years, a lot of these issue tokens at very arbitrary prices. You've seen that, right? There's tokens coming on chain at 20 million FTV, 50 million FTV. They're selling a 10% stake, so they're raising 2 million or 5 million. And then these tokens dump on the side. So I think we've covered this as well with Blockworks and the transparency filling. In our case, there's no team supply, so there's nobody to dump on you. And to come back to the range here is we don't want an arbitrary price that's being set here. What we want is actually for the market to discover a fair price. So we said, okay, the range is 4 to 8 million on the company FTV side, and then people can make individual bids here on what they think the max FTV should be. Okay. And based on this demand curve, we actually calculate the final clearing price and the actual how much the company is actually worth. So let's say, for example, the company here, they're putting 10 to 14%. So if we calculate it, we have 4 million. So 10% is the 400K raise. And if we look at 14%, that would be 560K. But for example, if the company is worth 8 million and they tokenize 14%, then it's a 1.12 million. So that's how the target raise range actually came to be. But 400K is the minimum that the Refi Hub team needs. I think it's even a bit less, so they have some buffer for liquidity and some other things as we see liquidity directly in order to fulfill their roadmap on what they have planned in order to reach this 50 million assets under management where they are already super profitable.
Got it. And if I understand correctly, the reason the team supply is 0 is because the team retains the other 90 to 86%, right?
Yeah, they don't retain token supply, so there's no no remaining token supply, but they retain the equity. So in this case, for example, token holders know exactly what they get, so there's clear value accrual through the equity side. And for the team, they don't need to worry about they can just execute and make revenue, and there's a clear value accrual on the token side because of this equity link.
Got it. And the team, on the other hand, that retains this 86 to 90%, they are pretty much free to do whatever they want with it. Like they could raise from VCs additionally, or it would work with like any other in any other model, right?
Yeah, I mean, there's some disclosure rights. You can't have a down round or things like that. So these things needs to be disclosed, and also the future rounds need to be disclosed to the token holders because they are having this SPV stake and with an independent director that acts on behalf of the token holders. But yeah, they are still flexible in terms of being able to have a follow-on round. Let's say, I think this is even a bullish case, right? Like Refi Hub performing very well. In a year, they have 25 million assets under management. They already made $1 million in revenue with the pipeline they have, and they make a seed round where they raise 4 million at a 40 million valuation. Suddenly, all the tokens should be at least worth 10x because of the equity link to what the current ICO is.
Yeah, makes sense. So now mentioning Refi Hub, so do you think Refi Hub is like the ideal project for crafts? Let's thinking long term, or what type of projects would you say would be ideal to launch with the crafts model?
I think Refi Hub has some very good properties that we really like, is because they already have traction. They already have 500K assets under management from 6 deployments. They have 500K TVL. They already achieved 14% APY, and they already have this qualified list of Solar assets that they want to bring on chain, and they already have LOIs from institutional allocators. So now they have the base, and now they need money in order for licensing, and they need money to scale. And I think this is the ideal case because you know it as well, right? Like token holders is almost like a community participating and helping you out to grow your product. But for that, a product needs to be there. And I think Refi Hub has a decent product that they can now scale together with the community and with the money that they raise. And I think that's why they are a pretty good case for the model that we have. And also a lot of the revenue that they have is coming from off-chain sources through these, cash distributions. So I think that's also a good case. But looking forward, I think there's a lot of room for other companies, for example, AI companies, robotics companies, more traditional startups that want, for example, to have community distributions, as we have seen it early on with the Belief app. But in the Belief app case, it was just a meme coin. In our case, you actually get upside to the startup that you're a fan of.
Yeah, amazing, amazing. So that covers kind of the project side. I would also like to know your take on the investor side. We know on MetaDAO a lot of the both permissionless and permissioned raises get investments from VCs, not only from community, right? I think peer to peer, half of their 6 million was filled by VCs itself. So I'd like to ask: Is Crafts more for VCs? Is it more for retail? Is it for both and for anyone and everyone? Or do you even think about a target market for investors?
Yeah, I think we're already in contact with a lot of liquid funds and more institutional deployers, but a lot of them actually want to look at these first raises. So I think as soon as we have good proof points, I think we are able to onboard more institutional deployers to anchor some of these rounds. So let's say we have an AI company that we can take a 2 million allocation, a seed round that's 10 million. We could possibly have liquid funds that anchor 50% of the round and then give 50% to a retail or angel base. So I think currently very much focused on angels, individuals, and high net worth individuals, but later on looking into VCs that have a liquid arm or liquid funds. And I think that's why I'm bullish on all ownership coins. I think they are a great category for people to invest in, but also where we'll see a lot more funds that actually look at this category, because there will be a lot of arbitrage opportunities. Let's say even in this case on Crafts, I think there could be tokens that, for example, trade at minus 30% of their next VC round. And then if the VC round is announced, there's a lot of arbitrage opportunity. So I think this will be where we'll actually see institutional adoption. And also on MetaDAO, I think there's a lot of great companies, as you mentioned, like P2P, that have great revenue numbers and great growth rates, which is even more important than revenue for startups. And some of these are undervalued. And I think there will be funds coming in that actually price these correctly and invest based on that.
Yeah, nice. I would also like to cover how do you, on one end, how do you pick projects? How did you choose Refi Hub? How do you filter out projects that are going to raise with you? And also for the long term, do you plan to only stay permissioned? Do you plan to be permissionless? What is the strategy? Because I think with MetaDAO and Futardio, it's a great case study to learn from. They made a complete separate branding, complete separate platform. I know a lot of people weren't really happy with the branding of Futardio and raising a serious startup on the plan with that branding. So just want to hear, what are your thoughts? Do you think about what do you think about on the permissionless side? How would that work? Would that be a separate brand, or are you not thinking about that at all?
Yeah, I'm thinking about it quite a lot. I think I have a bit of a different take of how we want to position it. For now, we want to be permissioned and really grow the reputation as well on the fund side, so that this craft standard is one line on the cap table, but it still needs to be more, how should I say, it should become more established in the future, so that a tier one VC that looks at the cap table in an AI startup and there's like the Craft STS identity on there, is more like, okay, we know what this is, and it's just a checklist, and they don't need to worry about the legal side of things. I think that's very important for us to establish ourselves more on the reputation side, on the legal reputation, but also on the reputation in general for on-chain investors that look at Crafts. So yeah, I'm very, very glad to be here as well. But then on the permissionless side, I'm not 100% sure how we want to position ourselves. But yeah, would love to learn more from your side, how how your experience was raising on Fotadi, or how did you approach it?
Yeah. I mean, I'm already talking. Gave some feedback to MetaDAO team directly. I think one super important thing that a lot of launchpads need to focus on is the founder experience after the raise is done. Um, so how do you? I mean, this is more specific to MetaDAO, but the onboarding afterwards, like how do you make a proposal, or how do you manage the treasury, or how do you communicate with your community? That's like super important, and would also like share the insight with you guys. Extremely important for the founders. That experience for the founders after the raise is done to make it super smooth to transition into running
Mm.
the project from the project after the raise is completed. So that's definitely what I could share.
Yeah, sure. Like the day-to-day operations of a founder post race.
Yeah,
I mean,
yeah. I think that would really help smooth it out and help with especially with communicating with investors. I think that's probably one of the most important things. Being a founder of an ownership coin is the communication aspect, because we've seen some teams get liquidated, and when that happened, it was because of wrong or poor communication. So keeping that clean is, I mean, the most important thing. Um, any founder would probably say.
yeah, 100%. I agree.
I was gonna ask you a thing we didn't cover, which is governance, and more specifically, um, let's say the team hits a target raise and they get funding. Are they free to use all of the money how they see fit? And is that something the investor takes into account before committing, or how does the governance structure work for using the treasury?
Yeah, I think it's similar to MetaDAO that it's provided on a monthly basis. And then if there is more capital needed, the founder as well needs to put up a proposal and needs to make sure that the majority is for it. Um, yeah, so it's similar that you need to put up a proposal for a definite case, and you can just use all the money. So that's something that we do as well to like guarantee, you don't have a fraudulent founder that just takes all the money and runs away. But yeah, and also for a founder, I think, um, yeah, he can, for example, if there is, a major release, or let's say they need a license, like they need 100K for a Vara license, for example, they can make a proposal for that and detail why they need the money.
Got it. And is the approval there just governance, token-based governance, or how does the approval process go? How do people
Yeah,
actually vote, yes or no?
yeah. Currently, we have a token-based governance mechanism. We built something that we call the constitutional governance. So there's like predefined actions that someone can take. So, for example, some random guy can just say, "Okay, we take the treasury to buy, this meme coin." So there's like a limited action set, and the money can only be released to the founder. So in this case, or for certain actions. So that gives some guarantee that only these predefined actions can be taken. And currently the governance mechanism is a token-based governance. But yeah, we are exploring decision markets as well. And possibly I think decision markets could even be cool, where you have something where obviously the treasury is governed by decision markets, but at the same time, you could have, the whole company treasury, for example, Refi Hub, they're raising follow-on round. Now the whole company treasury is there, and you could have a decision market about usage of that. But then, for example, the decision market doesn't define the final outcome, but it just determines the founders can see, okay, if we go with this option, that's how the people believe the price impact will be. And then you basically go with this option, and you basically have like, you see as a founder what's the impact, the implied impact of this decision, but you can still make the full decision for the company treasury. But this treasury that's provided to them in this case is is controlled by the token holders. So that's the distinction I would make. But yeah, exploring the governance mechanism still.
Got it. And just my last question there would be, so would that mean that then the team doesn't have any governance say because they have no tokens, or do they have it because of the remaining equity, or how does the team have any say in those decisions, or is it just all up to the token holders?
Yeah, I think for either minting additional tokens or for the treasury of the SPV, it's up to token holders, because in this case, these are the two things that either like token holders paid in, or that are also important to token holders, because if they would want to mint additional tokens, and these tokens are ownership tokens, and they want to provide ownership tokens as an incentive, for example, to tech creators to make content, then this should be something that token holders decide. But then on the company side, the token holders have a partial vote, but obviously on the equity side, you have normal equity structures and voting structures there.
Got it. Nice. That was a really good explanation overview of crafts. And now we're gonna bring up Christian and Jimmy from Refi Hub. Can you hear us, guys?
Hello, Vukan.
Hey, Vukan. Yeah, we can hear you well.
Yes. How are you doing, guys?
Doing good, man.
Yeah, it's been quite a long day, but excited to talk.
Amazing. So first off, I would just like to ask you, to introduce yourselves, and just to say that you are free to present, share screen, and show whatever. If you have a presentation or anything you would like to share, you can do that as well. But yeah, just opening the stage up to you.
Okay.
Awesome.
You want to go first? Or?
So yeah, I'm Jimmy, one of the co-founders of Refi Hub. With Refi Hub, we basically provide the financial rails for energy infrastructure on Solana. What that means is that we partner with energy developers that have solar projects, for instance. We tokenize part of the revenue share agreements of those solar projects. And ultimately, as energy gets sold to the local grid or buyers, then part of that revenue is distributed to Solana users on-chain. We've been operating for 20 months now with consistent distributions across 6 different solar assets or energy assets, ranging 3 different countries, and raised a total of $500,000 already into these energy infrastructure projects. So for us, yeah, we're really excited to be building in what we see as one of the clearest asset classes that has a use case within tokenized RWAs. Energy has been increasing a lot in terms of demand, in terms of the importance that it plays at the moment. And we're also seeing at the same time a lack of options and an increasing demand or interest in different ways in which to park capital on chain, particularly ways which are uncorrelated to typical markets, right? And I think a day like today is a great example of that. So yeah, it's a bit about us.
Yeah, I'm Christian, also one of the co-founders. And yeah, my role is more working on the due diligence side and solar developer relationships. So I'm responsible for sourcing and diligencing the assets that we list the platform, principally in Brazil and Singapore, now with a strong focus in Singapore and Southeast Asia. And yeah, the product shipped about 20 months ago and it's been distributing USDC consistently. But 3 years ago is when we actually started building the asset pipeline, which is now at close to $50 million in USD of solar plants worth to tokenize.
Nice. I mean, it's fantastic to meet you as founders and as a potential investor. I mean, now I'm happy to learn even a lot more about Refi Hub. I guess where I would love to start is, what is your general experience with crypto, with Solana, and with the industry itself of energy? Could you share a bit more about that? What's your, let's say, what's your pedigree on both sides?
For sure. So as a team, we actually started building together for 5 years. Everyone in the team has known each other for almost 7-10 years. 5 years ago, we launched an NFT project on Solana called Coral Tribe. And that was all focused on marine conservation. So there was a lot of donation work based there with different partner communities. And that really was what led us to realize the problem, where there was a lot of interest from the community in order to invest into on-chain assets that had somewhat of an impact in the environment, but a lack of options to do that via stablecoins, via Solana, and so on, right? There was a bit of a limitation there. Most of the RWAs were and still are in tokenized T-bills and credit. So we actually kind of stumbled into the problem, almost 4 or 5 years ago, building a sister company, and realized that we wanted to bring some of these energy assets or impact assets on chain. Going into that, we saw that one of our co-founders and CEO, Ave, has a background and master's in conservation, environmental studies, did a lot of work there with NGOs and with energy infrastructure. And I personally worked in Mozambique with payment rails for different smallholder communities. So from there, we started exploring the bottleneck there in general for energy assets, but also from our experience in Cool Tribe and Solana for over 5 years, seeing how Solana can fit into that, not only the traceability, but being able to do global settlements, allowing users from, let's say, Brazil to invest into cash flow generating assets in Singapore in seconds. So yeah, team background is ranging a lot between conservation, impact, payment rails, and community growth. And I think it's just a problem that we encountered and wanted to try and solve firsthand.
Nice, and thank you for sharing also why you're choosing this to raise in the crypto ecosystem. So I would like to go deeper there. Why did you specifically choose crafts, and also why did you choose this model where you're only doing 10% or having this range of 10 to 14? We from ownership we are more on the MetaDAO side. It's a little bit of a different platform. So yeah, we'd just like to know why did you choose crafts? And why these numbers as well?
Yeah. I mean, after working with them for 3 months, obviously the team was, in Crafts is just incredible in terms of their delivery. But then specifically with the model of Crafts, what brought us in, I think, was several aspects. The first one is that they bring a single entity into the cap table in the form of an SPV, and they allow for a partial tokenization of the company rather than the entire IP or the entire company. For us, this provides us with two things. The first one is holder protection of all the holders that invest into our token raise, where they're able to get rewarded in the same way that any of the founders would or will in case of an acquisition, price round in the future, or so on. But also, secondly, it does not close any doors about future raise directions. We can, given that we're tokenizing only part of the company, as a single SPV entry into our cap table, we're still able to either tokenize another part of the company in the future with Crafts or explore any other options depending on how the landscape for us changes. So to summarize, I'd say, protecting the users and making sure that the people that believe in us and are part of this journey are protected and able to get rewarded for that legally and contractually, and also just keeping as many options as possible as we keep scaling in the coming years.
Nice. I think I also have one more question, which would be for both Philip and you guys, which is why did you specifically choose to go with Solana? Everyone gets asked this question. Of course, Solana is its hottest ecosystem right now. It has a majority of the users, but the liquidity still isn't the biggest on Solana. Ethereum is still king in some numbers. So just want to know what attracted you specifically to Solana and this ecosystem? I guess Christian and Jimmy, you can start, but also would like to have that answer from Philip.
Yeah, as Jimmy mentioned, where the founding team actually all started was around 5 years ago. And actually during that time, as I mentioned, there was quite a strong environmental and efficiency aspect to what we were doing. And Ethereum was like crazy energy production and it hadn't upgraded its model yet. So it was just a much faster way to transact and light and efficient. And as we established that initial bubble of contacts and network, we kind of found a good home in Solana. We've been to every breakpoint since Portugal, and really vibe with the community and see a clear path for institutions coming on, RWAs being a big category, the foundation supporting a lot of that. We've been working quite closely with the Solana Foundation on a few different projects that some are connected to Refi Hub and some not, but that's also been part of our journey and the support we've received as well. So I think that those are the main reasons. And yeah, we're kind of betting on it as the space for RWA rails. Ethereum will probably also hold its weight, but we just see a lot of momentum and kind of naturally want to ride that and be first movers in this space as well, you know?
Yeah, smart. Philip, over to you, same question.
Yeah, I mean, I've been a researcher for a payments enterprise company. So I've been researching already in 2021 different chains. And so stumbled up on Solana after working on different layer twos, and then wrote a bunch of smart contracts on Solana already in 2021. Contributed early on to Metaplex. So I think long history on Solana, a lot of the smart contracts. Like, I don't know if you've been there back then, but it's been crazy times. Everything has been unstable. Blockchain has been down and halted. So it's been good times, been, a lot of fun writing a lot of these early smart contracts and fixing a bunch of things that haven't been figured out back then. So yeah, I think just a lot of history, a lot of support. I know a lot of DOG people on Solana, and it's a great ecosystem. And I believe as well that in the end, I think the best technology will win as a settlement layer, and I think that's where Solana will come out on top.
Yeah, and there's one more factor as well, just building on that, is the way Solana are organized as an organization and as a foundation. Like, if you go to an ETH conference or see the progress and the decision making, it's super decentralized, but there's kind of like no order, and it's difficult for them to bring on commercial partnerships, et cetera, et cetera. Solana feels like a more well put together unit, and that's all. If you have to trust the foundation of the blockchain you're building on, and I think they've got a great sort of business expansion mentality, which is powerful.
Yeah. That's a similar answer that I always give when people ask me why I focus so much on Solana, and it's the support from the foundation. I'm sure you guys are also working with some super teams. On my end, Super Team Balkan is supporting us on the ownership side a lot. So, I mean, without the super teams, it would be a lot harder. And it kind of sucks that Ethereum doesn't have. It sucks for them. They don't have really the support like Solana has.
Yeah, that's true. Yep. Very true. Yeah, super teams are great.
Yeah, shout out Super Team for real.
Yeah.
I think we covered all that I wanted to cover on you guys and y'all's history. So I would ask you or Philip maybe to share the screen with their deck, because I want to now learn more about energy, about Volt, about this raise. So what am I actually investing in, and what kind of revenue can I expect coming back in the treasury, or as an investor, how can you?
Should I open up the page, or how you want guys to do it?
It would be great. Yeah. I also know there's their deck there. You showed me. We'd love to know also on the team, because I saw something very interesting on Fotardio. You don't have the team. On Crafts, you can see the team with all the links. So we just also want to know on your side who's also part of the team.
Yeah, absolutely. Do you want me to kick off?
Sure. Yep. If that works, this page.
Or if you prefer, you can also share the investor deck directly. I think it's there. So whichever is best for you guys. Just want to have.
You can also share. I think it's possibly best, and if you give the rundown, and then some of the proof points, I think are really interesting in terms of what you did already and the pipeline, basically, that's coming up, and how that translates into actually a very good business in terms of ARR.
Yeah. Sure.
Yeah, I think right now actually we're seeing something very interesting, which is with all of this huge market downturn, a lot of ownership coins are holding up incredibly well because their business fundamentals are just still solid, still doing good, and they just aren't getting wiped out as much as the other assets, which is pretty nice to see.
Yeah, 100%. I think especially in Refi Hub's case, there's all this yield and money is coming from solar deployments. They have steady cash flows. It's all in Singapore and US dollar. So it's even more stable than anything else, which is pretty cool.
Fantastic. Yeah, we can see your screen, boys. So y'all can just start from the number one from the start. And yeah.
Yeah, I mean, that's just a great link what you just guys said, right? So for us, it's just really simple. RWAs right now are one of the fastest growing aspects of on-chain in general. and over 80% of that is just credit and T-bills. And then you've got energy, where demand is just skyrocketing, super punctual right now with everything going on. You've got, increasing demand in terms of how much electricity is needed in the coming years, and therefore how much infrastructure we need to build. Yes, if we want to keep using, AIs and all of the things that we're so dependent on today. So for that, there's one asset class that emerges that, you have the co-founder of Avid talking about, you have Elon Musk backing and so on, which is solar. And solar is also seeing a huge growth, but the way to fund that is where we saw a gap. For us, what we see is that a lot of the solar projects have either 500K minimums or which is usually too high for retail, but then too low for institutional or bank to get involved, right? So where we sit and what we do is we partner with solar companies that are building projects in the range between 500K and 10 million. And then we tokenized a revenue share agreement of all of the revenue that solar panel will generate throughout maturity. Maturity means that all of these solar assets are usually insured for up to 9 to 25 years. So in case of any damage, then all of that is protected at a contract level. And that means that our holders are able to receive monthly distributions in USDC from actual energy that's being generated, right? So doesn't matter what the interest rates are looking like, doesn't matter what Solana's price is looking like, as long as the sun comes up and the solar panels keep generating energy, then that's distributing to our holders for the past 20 months now. So, and yeah, as mentioned, we've been live now for around 20 months doing consistent payouts. So far, we've funded 6 projects with an average realized IRR on solar energy assets of 14%. And all of that mainly focused on retail users. So a lot of the focus now and what we're putting a lot of our energy into is scaling that beyond it. So on the deal side of things, there's around 49 million already in deal assets that are in the pipeline and ready to fund. And then on the capital allocation side of things, we're in touch with several institutional and capital managers that are looking to allocate between 5 and 10 million throughout the next year with some LOIs signed. So I think on the capital side, it's also quite interesting where you look at both on-chain and off-chain institutions. And on the on-chain ones, I think the space changes so quick that there's a lot of institutions that were making money in the past few years from things like staking and validators, where that's no longer lucrative at the scale that it was, or where they're getting a lot of their yield from DeFi lending, which is so dependent on market movements, right? So I think a lot of these on-chain institutions are now looking for uncorrelated yield that needs to come from actual assets off-chain that can protect and give some sort of a hedge. So I don't know if you want to jump in there or...
Yeah. So yeah, the way the business works is we list a project and there's a listing fee for that project. So say we list a project for simplicity's sake, 100K, we take a 3% one-time fee on that. So that would be 3K. And then where it gets interesting is we also take a 12.5% of the yield share. So everything that gets paid back to investors, we take our 12.5% cut on that. And that extends for the whole maturity of the asset's lifetime, typically between 9 and 25 years, as we have now. Vault is another element that you spoke about and asked, and this is really the way in which we see what we do scale. At the moment, the current status of solar assets in general and in TradFi is that they are quite illiquid. Even the BlackRock Clean Energy Fund has a waiting period of like 1 to 3 years to come out of that. And that's one of the biggest, sort of most liquid funds in a way. So these assets are very typically illiquid, and especially for on-chain capital allocators, that's something they value highly. So Vault is kind of our answer to that. It's basically a single token, which contains a basket of diversified energy assets from multiple projects in it that all field yield into it. And that single token's price appreciates over time. So what this really means is that it's very easy. You just hold the single token, any retail investor or institutional capital allocator, it's a simple access point for them. And additionally, it makes us composable across the entire DeFi ecosystem, giving more utility to that investment and more distribution, basically, to us. And that's, I brought this up because Vault as well has its own revenue model with assets under management fees and exit fees, right?
Got it. So if I wanted to invest in solar, the absolute easiest way would be just to go with Volt, right? Or
Well, you have three models there, right? If you want to invest in solar, you've got either single project investments through our platform. You have Volt for a diversified exposure of a portfolio of assets that are generating, or you have our token raise going live now, which is actually funding and getting exposure to the financial rails backing all of these. So yeah, three different levels to that.
Yeah, and there's an important distinction as well between the individual deals and the Volt single token. And by the way, Volt is a product that we're building and plan to release in Q3. It's not something that's live. It's part of what this raise helps push forwards. But single project listings are much longer exposure, higher yield because you're locked up, but it's for investors who are more familiar with solar, have strong conviction in the currency and the geography they're investing in, and know the market quite well. But for the Volt token, it's the simplest way in that term, and in a way lower risk, lower reward as well, and more liquid.
Yeah, for example, I think where I can jump in, I think this, for example, enables as well integration into these DeFi boards. I think what we have seen, for example, on Kamino with figure markets, I think they had over 600 million that came into Prime, which is like home equity line yield. And in this case, Vault enables this kind of DeFi integrations for Refi Hub, where you can, for example, integrate into Kamino and like, let's say they have already like 49 million in solar assets, and they have the institutional demand, and then they open up this vault, and it could, for example, with a limit of 20 million, there could be 20 million in deposits coming in, and suddenly they have 20 million TVL, which they can distribute into these solar deployments and give people like this diversified yield from solar. And you can, for example, get 8% APY from these solar assets, which is, I think, especially in a bear market, if we are entering now, it's a pretty nice source of yield for people to deploy in.
Yeah, and just to add to that, like I think the good thing about Volt there as well is that it's backed by assets which have a very constant yield, let's say, and very low volatility, right? A lot of these solar assets have contracts with the people buying the energy for 20 years at a predetermined price. So it's very kind of applicable to Volt in general and to DeFi to be able to predict a lot of that yield based on contractual agreements and historic performance of these solar assets, and be able to design the mechanics based on that, rather than using assets that are very exposed to supply demand characteristics and so on.
got it. So could you walk us then through the long-term vision? Do you plan to scale from just solar into maybe wind and hydro, or just to stay solar? And what's the plan for scaling, essentially?
Yeah. I mean, for us, we see a huge opportunity for solar. In general, there's around 450 billion going into solar. There's a huge gap, and specifically just within Southeast Asia, which is where we're focused on. Solar is the most predominant asset class in renewable energy that is growing. There's a lot of government incentives to build that. So we think the opportunity there is huge, and see the expansion more at a geographical level. I think there's three main layers that we're seeing to the expansion post-raise. The first one is converting the LOIs that we already have signed from fund managers and expanding into that institutional capital and connecting them with a 49 million in deal pipeline that's already ready there to go. And then hand to hand with that is launching Volt in order to be able to always have an open vehicle to gain exposure rather than a single project level, right? And then from there, it's expanding into new geographies and being able to really kind of zone into Southeast Asia, which is where a lot of our partners are currently focused. For us, that what it looks like is that at 50 million TVL, we'd be looking at around 5 million in revenue, but with 3 million of that coming in recurring revenue per year, given that every asset listed is bringing us a monthly yield to the company as part of revenue stream. So we think that energy is going to be tokenized and is going to be coming on chain, and we're positioning ourselves to be the financial rails to bring that on chain and be able to connect investors with energy developers in a simple way. So starting on Solana, starting in Southeast Asia, and then expanding from there.
Yeah, and just on your point about scaling and expanding to other forms of energy, like there's just so much room to grow within solar. Southeast Asia alone is going to need about 50 billion invested in it in the next 4 years to meet government mandates and targets. And there's great advantages to us as a company for being quite specialized in having very good due diligence systems and quality control. If we're focused on that single asset, we know the ins and outs of it, and can have a very efficient process to bring on that supply, which is already quite huge. And yeah, as things grow, we might explore adjacent technologies, but for the moment, we see, at least for the mid to the beginning of the long term, like there's a long road for solar. Energia, one of our competitors in the Web 2 space and traditional finance space, have 450 million in assets under management right now, and they've scaled that in a few years with longer lockup periods and different jurisdictions that they aim for. But it's a case study to look at. Yeah, in a few years you can scale with solar quite proficiently.
Great. And I guess the last question I would like to ask you is your short-term plans, meaning we have the raise ongoing now. When the raise finishes, I would like to hear the both cases. If it fails successfully, if it doesn't fail, what are your next plans immediately after the raise is done?
Yeah, I mean, for us, the plan doesn't really change. What changes is the speed maybe at which we're able to execute it. But I think for us, it's really converting the deals in institutional level that are already there and signed in LOIs. So we're able to just increase the TVL to a point that puts us in a position to be able to launch Vault with enough assets on there to really provide that diversified exposure. Vault is towards the end of the development phase, so getting ready for code audits and so on. So regardless, again, for Q3, we'd be launching Vote. And I think depending on how the raise goes, if we're able to finish the raise properly, then that would mean going in with a stronger GTM and being able to expand that sooner. If not, there's still enough opportunity, we feel, and enough interest, demand, and value in having a composable asset within DeFi that is backed by cash flow generating energy assets, that we'd be able to grow that organically. So
yeah, and just on the personnel, like human resources side, like if we did raise, we would, right now we've got a kind of financial analyst part-time who's helping diligence and model a lot of the cash flows and the deals. And it's already really full on with him to crack this the pipeline we've got. But we would bring him on full-time, for example, and potentially someone else to help on that supply side even more. And as well on the demand side, someone who could be kind of head of institutional relations, or someone who has that background in institutional capital to help shape us and bring in a lot of those capital allocators that like to have a relationship or some trust to kind of bridge that gap. So I think without the raise, we wouldn't do that, and we'd kind of be, trying more and putting more time and energy in. But with the raise, we could tap into that experience and knowledge base and manpower a little bit more as well.
Fantastic. And I would also like to ask Philip as well the same question. Once the Refi Hub raise closes, what are the next plans, next steps for Craft as well?
Yeah, I think we're pretty pumped about the raise. Like, for all the listeners, check out the Craft Dev Refi Hub page. For us, also, like if it fails, I think we're able to help a great company accelerate their roadmap. And I think we will stay in close contact with Refi Hub. I really like the team. Already made a lot of intros and looking forward to help them independent of the results. And yeah, we're looking to, bring more exciting startups on chain. We have a bunch of AI startups and robotic startups in the pipeline as well. So yeah, focusing on that and working more on liquid funds and institutional allocators that want to participate in craft raises as well.
Fantastic. Christian, Jimmy, thank you so much. I will just open the mic for any last final words. Where can people learn more about Refi Hub, about you guys? They, of course, know about the raise ongoing. So just want to give you a last opportunity to share anything you would want.
Absolutely, yeah. To learn more, just go on the Twitter profile of @Refi Hub in the bio. There's a link to the Crafts Raise portal on their full description of the entire company overview, or full transparency link to the data room about the team. And we're really excited to be sharing this journey with Crafts, and also seeing so much support from the Solana ecosystem, Solana Foundation, super teams, Canada, UK, and so on. So I think we're just really excited for what's ahead, and to keep growing and scaling energy infrastructure on Solana.
Yeah, and if you only have 10 minutes and you want to get like a nice overview, I recommend the article that's currently pinned on our Twitter @Refi Hub. It kind of covers the company quite holistically and the thesis to get to understand it a bit more. And actually our articles go in to a bit more depth about the market thesis and kind of key information as well that investors would want to know in quite a simple way. So I recommend that. And yeah, you can also reach out to us in our Discord as well, which is linked on the Raise portal. If you've got any questions for the founders and want a bit more face-to-face or messaging across DMs or whatever, like we're also open for that.
Fantastic. And also, Philip, I'll open it up to you. Any last words you want to share?
Yeah, for sure. Check out the Refi Hub race page. I think there's a lot of great information around their pipeline. And I'm excited to bring more cool startups on chain with Crafts. And thanks for having us, guys. It was a pleasure.
Amazing. Thank you. I mean, thank you so much, Philip, Kristen, Jimmy. Thank you so much for sharing with our community and the ownership community. I think we had a lot of fantastic topics, which is very good because we're going to have so many clips going out in the next 24 hours before the race is done. So really thank you for all the value shared, and thank you for just coming on and building the future of the RWAs on Solana. As you maybe know, I'm working on tokenizing dinosaurs, so it's not quite solar and energy, but I mean, I'm happy that there's so many people working in the tokenization niche and building new stuff on Solana, because I'm super bullish on tokenization, on ownership. I think it's the two best verticals for the next few years, in my personal opinion. So I know I see you have elite ball game as well.
Right. So, thank you, and appreciate all the questions and the conversation.
Thanks a lot.
Bullish RWAs.
Of course. I mean, absolutely the same. So thank you guys. Thank you for coming. Thank you everyone for tuning in for the stream today. We had this is our second stream. We had our institutional MetaDAO stream, and now of course with the Crafts and Refi Hub. So thank you so much for joining, and we'll see you in the next report.